on BMAX?
Yeah, so BMAX is an ETF that launched about a week ago. And there's a whole one of the great use cases of Bitcoin is to put it in the middle of the capital structure of a publicly traded company. And if you have a publicly traded company, it causes your equity to be very volatile. So like my company's the most volatile equity out of the S&P 500 universe. Sometimes a volatility of 90 to 100. Well, when the volatility of a public company gets above 45, you can sell convertible bonds because convertible arbitrageurs actually are able to sell that volatility or extract it, and that pays the cost of the interest. So convertible bonds make sense for companies that have volatility. But if your use of proceeds of that convertible bond is to build a building or to invest in a long duration project, it might take 3 to 5 years before you know that the investment was profitable. So most companies that issue convertible bonds only do one and done. They issue a bond and then it's 5 years before they issue another one. And that's because their investment cycle is so slow and it's very heterogeneous. And the source of their volatility is normally uncertainty about whether the company will be successful. Most well-run companies, they aspire to get rid of volatility. For example, if you're a CFO, you would brag, we have no volatility on the balance sheet. We can never lose any money. And then if you have a P&L, you want to sign your customers to 3 to 10-year contracts with escalators every year. Look at Microsoft. No volatility on the balance sheet, 3-year enterprise agreements that roll over. And the CFO is renegotiating 1/12 of those agreements every quarter. And so you never have more than 8% of your revenue ever in play, and you can forecast out. So that's best practice of a conventional company. If a company capitalizes on Bitcoin, you could sell a $1 billion convertible bond. You could put the money to work in 1 week. You could announce that it was profitable the next week. So the investment cycle isn't 3 years. The investment cycle might be 3 days. Okay, then you could go back to the market. You could issue another convertible bond. You would make the same exact investment. The benchmark of profitability is whether you accrete Bitcoin per share. You could say, well, what if the market doesn't really care about Bitcoin per share? Well, the equity investors in a Bitcoin company care about Bitcoin per share. They've self-selected. So when you're on the Bitcoin standard as a public company, you can issue convertible bonds because you're going to have the volatility. You're going to have a very fast investment cycle. It's homogeneous. And you can actually create a set of metrics to describe whether it was accretive or dilutive. So my company pioneered that. We actually became the biggest convertible bond issuer in 2024. We're the biggest convertible bond issuer this year. We're so big that we're actually getting to the point where we're outgrowing the convertible bond market. And so the shorts and the cynics say, well, you can't keep doing that because you've outgrown the market. Well, and BMAX is the answer to the question, how do you grow the convertible bond market? The reason that the convertible bond market is a stable set of capital is because most of the people in it are convertible arbitrageurs, and you have to be a specialist. And so those bonds are sold 144A over the counter to specialists who engage in convertible arbitrage. But in fact, those bonds would be very useful to someone that wanted to be a Bitcoin investor because those bonds historically up until now have outperformed Bitcoin. So if you wanted to actually buy a bond that performed like Bitcoin, maybe you want Bitcoin upside, but you want limited downside or a different downside exposure, you would buy a Bitcoin convertible bond. But you can't because the bonds are only traded to qualified institutional buyers. So BMAX is an ETF that is actually plugging an over-the-counter institutional market into the general public market. So you could boil it down as to say, well, now there's a way for a retail investor to buy convertible bond exposure and in Bitcoin-backed converts. But you could also say it makes it much, much easier for even an institutional investor because they don't have to trade over the counter. Their over-the-counter markets are dark. There are wide bid-ask spreads. They're very inefficient. They're very illiquid. And so BMAX is creating liquidity, availability, transparency, and a certain degree of continuity. And I think that as instruments like that come out, right, I would say the most valuable ETFs, by the way, they're ones that let a retail investor or a diversified investor very quickly put 2% of their portfolio into something. Like, I want 2% in gold in like 1 minute. I want to own 2% of the real estate in New York City. You know, you need a REIT to do that. I want 2% of Bitcoin, right? Or I want 2% of Bitcoin-backed bonds. If you have an instrument like that, it's differentiated. It really is doing more than stock picking. I'm not just buying 3 stocks in the ETF that you could have bought. I'm literally crossing the 144A barrier, and I'm buying an institution in an institutional over-the-counter market to make available to you on Robinhood. And so I'm excited about things like that. I think it's going to grow the convertible bond market. It's going to bring new types of investors to the market. I would say my company has expanded the market because we have found, in my opinion, one of the great use of proceeds for convertible bonds. What are we doing? We're building a digital building in 1 week. How many are we going to build? We're just going to keep building them, right? What if you could do 100 bond issues and build 100 digital buildings and just keep coming back over and over again? That's good for the investor. It's good for the market. It's good for the issuer, right? And BMAX is just part of bringing that idea to the general public.
Are you able to talk about the reasoning behind adding Mara and Riot? Because Strategy has a cash flow as a software business. But for Mara and Riot to have cash flow, I assume they will have to sell Bitcoins.
Yeah, well, I'm not the issuer. And so that would be a good interview for you to have with Greg King,
Please.
Right, who does issue BMAX. And I would be speculating, but in general, I think it's probably from a regulatory point of view a little bit easier to issue an ETF that's a diversified portfolio or distributed portfolio of bonds from multiple issuers instead of all bonds from a single issuer. And I think that would give comfort to a lot of mainstream investors that this is it's not a single issuer strategy, but rather it's an industry strategy. And I think right now, you'll see many companies on the Bitcoin standard issue convertible bonds. They are. And then I think you'll see many companies on the Bitcoin standard, buy Bitcoin for their treasury. And so BMAX is an example of a company offering access to that trend. But OWNB, OWNB, is another interesting ETF that was put out by Bitwise, which is basically owning companies on the Bitcoin standard. Right. And those operators, they will balance their portfolio for all sorts of reasons over time.